All right, welcome to The Explainer. Today, we are digging into Grab. If you're in Southeast Asia, you definitely know the name. But their ambition is way, way bigger than just getting you a ride or delivering your dinner. We're going to look at whether this super app has what it takes to become a super stock. So yeah, you probably know Grab for hailing a ride or ordering some food. But that's really just the tip of the iceberg. What we're talking about is a massive, publicly traded company that's become the go-to super app for daily life in 8 different countries. And that's the real question, isn't it? Especially for investors. I mean, the company's scale is incredible, no doubt. But does that make the stock a smart bet? To figure that out, we've got to pop the hood and see what's really going on with the business and, of course, the money. Okay, so first things first, to really get the stock, you have to get the business. What exactly is Grab? Because trust me, it's not just one thing. It's really a whole ecosystem. It all started with mobility, ride-hailing, think Uber. Then they pushed hard into deliveries, food, groceries, whatever you need. But where things get really interesting are their newer ventures. A super fast-growing financial services arm with digital banks and their own in-house tech for ads and maps that basically runs the whole show. All right, so that's the business model. But the billion-dollar question is it actually making any money? Let's do a quick financial health check and see if this whole strategy is really paying off. Okay, so check this out. In the third quarter of 2025, Grab brought in $873 million. But honestly, the headline number isn't even the most exciting part. It's the growth. We're talking a 22% jump in just 1 year. For a company this big, that is some serious momentum. Now, this is a big one. Grab is sitting on a mountain of cash, $5.3 billion. That's not just a safety net, that's a war chest. It gives them so much firepower to invest in new ideas, scoop up smaller companies, and just ride out any economic turbulence. And here it is. This is a huge turning point. For the first time, Grab actually posted a company-wide profit, $17 million. For a tech company that's been famous for spending big to grow fast, finally getting into the black is a massive, massive milestone. So where is all this growth actually coming from? This is what you really need to see. Sure, the delivery and ride-hailing businesses we all know are growing nicely. But look at financial services. It is absolutely on fire, up 39% year over year. That's the new engine of the company, right there. Okay, so the company is clearly on some solid financial ground now. But the real argument for growth, the bull case, isn't about delivering more noodles. It's about 2 huge, pretty ambitious bets they're making on the future. So the bull case really boils down to this. It's pretty simple. If Grab can pull off 2 key goals, its valuation could just skyrocket. First, they have to turn financial services into a real profit machine. And second, they're trying to become the leader in autonomous driving for Southeast Asia. And here's the timeline that investors are watching like a hawk. By the end of 2026, 2 big things need to happen. 1, that super fast-growing finance division has to stop losing money and break even. 2, their autonomous vehicle pilot in Singapore needs to actually work. If they nail both of those, it's a completely different story for this stock. But, it's never that easy, is it? Let's be real. It is not a clear road ahead. High growth stories always come with some big risks, and there are definitely a few major hurdles that could trip Grab up. So what could go wrong? Well, a few things. For starters, competition is absolutely brutal. You've got rivals like GoTo and Foodpanda, and that can lead to some ugly price wars that just kill profits. Then, as they lend out more money, there's a growing risk people won't pay it back. And of course, just operating across 8 different economies is, well, it's complicated. And let's not forget, building self-driving tech is, really, really hard. And if you want proof that these concerns are real, just look at this number. About 7% of Grab's publicly traded stock is held by short sellers. That's a meaningful chunk of the market actively betting that the stock price is going to go down, reflecting those exact risks we just talked about. So you've got this massive potential on one side and these very real risks on the other. How do you weigh all that? Well, it really all boils down to one central debate. This quote just nails it. The entire story is right here. The big question is, can Grab's profitable main businesses, deliveries and rides, stay strong against all the competition? And if they can, does that buy them enough time and money for their big bets in financial services and autonomous tech to actually pay off? That's the whole ballgame. So, looking ahead, analysts have basically mapped out 3 possible futures. The base case, which they see as the most likely, is that Grab just keeps chugging along with steady growth. The bull case, that's the dream scenario where everything clicks into place. And the bear case, well, that's what happens if those risks with competition or credit really start to bite. So when you boil it all down, the takeaway is really this. Grab has already done the incredibly hard work of building a massive, profitable core business. But its journey from being a super app to becoming a true super stock, that now depends completely on whether it can transform into a high-tech finance and autonomy powerhouse. And you know what? The answer to that question could very well define the future of tech in Southeast Asia. Thanks for joining this explainer.